Are you ready to jump into the world of investing in multifamily syndications? Well, wait until you see this amazing deal that I have an opportunity to be a part of. Welcome to Invest, Buy, and Sell with Jael. And today we're going to be talking about my multifamily journey. This is part 2, and I'm going to show you this amazing deal that I had the privilege to be a part of. And actually, we do have 8 more slots left. So if you want to be a part of this deal after watching this amazing presentation, just make sure you use the link below to get on my calendar for more information. Let's dive in.
All right. Thank you, TGT Capital. I appreciate you guys having us on. I know that a lot of sponsors want to work with you, and I'm excited to showcase the Mill District for everyone here tonight. Here we have our disclaimer. It's basically our SEC 506C offering for accredited investors only. Please read through it at your own leisure. And I wanted to start off with the team. Now, the team is such an important piece of any deal, and especially for ours, and I want to highlight a very important aspect of this team, not just the 75, probably closer to 100 years of real estate experience, but also to the successfully exiting of 13 properties full cycle. And what that means is it's not just about acquiring, it's also the acquisition, the operations piece, the capital event disposition piece, and all those need to go smoothly for a successful full cycle performance, which we've done 13 times now. I feel as though that experience is just something that we lean on, because as things come up, we continue to ensure that things follow through successfully. Currently, we have over $200 million in assets under management, working together as a team here. And I'm excited to have Biff Ramsey with me here tonight. Biff is our COO. He comes from the student housing world, came to us from Landmark to MTN Investment Group, and was there for around 20 years in the student housing world, that is. He's got over 25,000 beds full cycle. Pretty amazing. That I believe his dispossessed amount is close to, if not over $1 billion. So when I say we have the right experience, it's not just experience in general, but strategically positioned experience for us, especially with a student housing property such as the Mill. So let's dive into why do we love this deal. We love this deal because this is what we've all been waiting for, right? We've been waiting for the bottom to drop, for something to happen. Well, this is a forced sale through that is off market. This is just not something that can come up on your, from a broker to dealership there that you're going to see online. And this is brought to us through Biff's relationship. Again, as I mentioned, through his time in student housing. We love it because it's cash flowing day one. This Class A property is given off 8% on average, cash on cash, which again is very strong for a Class A. And we're going to talk through in much more detail here the strong market fundamentals of Athens, Georgia, the depth and the growth that we'll see, and that's where we're going to get the rent comparables, which are currently $300, $400, sometimes $600 above the Mill's average currently. Hitting on some highlights, we've got this is a commercial multifamily mixed-use property built in 2022. So when you see these pictures, you'll know what I mean. It is new. It is a beautiful property. I can't wait to show you more on it in these pictures. It is a 108-bed, 87-unit. And so you'll hear anytime anyone talks about student, it's going to be via the bed count. That's because each bed is its own lease. And so that's why you'll hear us speak to it as that. Importantly, we have 100% residential occupancy and 100% commercial occupancy. So little investment highlights for us here. And then moving on to the return metrics. So we've got a Class A property with a internal rate of return of 18%. And it is so incredibly difficult to find that. I mean, typically a Class A you will see 12, 14, maybe 15% internal rate of return, and that really does go to speak to how this opportunity came to us off market and the ability for us to really turn these amazing returns back to our investors. You'll see the cash on cash 8% and an equity multiple of 2.05. Keeping things just as a big perspective for those of you that like the stock market tries to double your money as a 2.0 equity multiple after 7.5 to 8 years. So just a one-to-one comparison here. This is obviously a stronger return than your stock market hold. And again, we talked about this for over a 5-year hold position. Moving on to the overview here. I mean, this property, it looks like it could be a university in itself. We've got, again, a mixture of retail space, commercial retail space, and residential. We've got our kiosks here in the middle, and you're going to see a picture of these later. But the kiosks are essentially fixed food trucks that are there in a circle. It brings a lot of community around here. And speaking of community, this community within a community, if you would, it has all the amenities that you'd be looking for. We have an F45 gym up here. We have a famous chef within Athens. He started his second restaurant, Nighthawk Lounge, here in A. We've got dance studios and rock climbing walls here to the south, and Chase Street Market up here to the northwest. It really is obviously just checking out the green space in general. It's a beautiful property. And what's so interesting is within these kiosks and all these other commercial opportunities that we have here, people are driving in from outside of our community and parking in here and grabbing, coffee here from Sunroof Coffee or the Vitality Bowl spot, or you name it. So we have another Dog Day Frosé, which the sororities and fraternities end up lining up on game day, pack their coolers with. I mean, who doesn't like a frozen rosé? So it really is a unique community here. And then we go into an awesome ability. Again, these pictures, although they're beautiful, it's so difficult to portray. As Biff and I, we've walked this property several times. It is just gorgeous. And pointing out, when you see 12-foot ceilings, you walk into a place with 12-foot ceilings, you automatically think that there's going to be a comma in the price tag. It is absolutely gorgeous. You've got the quartz countertops, OVP flooring, the flow. We're going to talk through the layout here shortly too, the thought that went into the layout for tenant retention as well. Little things like the washer dryer in-house. I know a lot of parents like having their kids take care of their own laundry and not have to come back. So there's that. But again, just take a look at just how well, I call it the attention to detail of this area is really something that's to be admired. And then we walk out to the exterior here, and you see the truly the timeless, the classic sense of the brickwork, the white brick, the steel handrails and the entry awnings. It really fits the Athens aura and the neighborhood quite well as well. And right down here at the bottom left, you'll see an example of actually that's the Sunroof Coffee kiosk for us. But again, going to the attention to detail, look at this, the white brickwork. It is just stunning. And you can see why we're so excited about this property 2022 build. They did a magnificent job with it.
Don't forget to mention, Brad, and hey everybody, Biff Ramsey here. Don't forget to mention though, our property also won 2023 Boutique Student Housing Development of the Year for the whole country. Award winning. Right. So I'll sprinkle that in there for you.
Yeah, thanks, Beth. It's yeah, you're right. Best boutique development in America. It's tough to. It's not just the Southeast. This was across the United States, and as you again, you can see why we're so proud about this property. Again, just as a reminder, we are 100% leased up. The commercial leases, there's 5 triple net leases over 5 years. And then the kiosks are 1-year leases. All of our tenants have put in a lot of money and capital into their positions, into their units, and we really appreciated the setup, because all these amenities, right? The coffee, the gym, the bar and lounge, all these things, all these positions within our community, they're paying us. They're revenue generating. Typically you'll see, and this goes to our focus and why this, why we got this award to begin with, why all of our previous deals are successful. We have a very laser focus on our niche, on our strategy. And that's a well-located, well-designed, efficient design in tier 1 universities. And what we mean by well-designed and efficiently designed is low OPEX, is you're going to see that because we're not paying for a gym. The gym at F45 is paying us, right? And so these efficiencies allow us to continue to work at such a high level that a lot of different communities like this just can't shake. We got to talk through the floor plan. So little things like tenant retention is another thing that we get to see a lot with our 2-bedroom here. So think about it, you're hosting, you have people over, and you don't want people to walk through your bedroom here to get into the bathroom. But instead, we have the half bath out in the living area. It's just one of those things that you don't think about until you're living there, and that we believe helps the tenant retention quite well. And Biff, I'll hand it off to you. I know Biff is a UGA guy himself, so I want him to tell you about the area in a bit.
Yeah, great work, Brad. Thanks. So yeah, to kind of frame, we talked about the property specifically and some of the nuts and bolts and the structure and the efficiencies, the amenities and all that, the retail being the amenity that pays us. Now let's zoom out a little bit. Now let's look at the neighborhood, at our place, adjacent to downtown, pedestrian to downtown and campus. So the Mill District sits above the Boulevard Historic District. You can see here on your screen, which is off what we call the Prince Avenue corridor. Prince Avenue is basically the main thoroughfare that comes in from the west into downtown Athens. So the Mill District is nestled right in basically a historic neighborhood. Boulevard and Normaltown both they're old, Victorian style historic homes in an established neighborhood. A lot of professors, a lot of townies. It's just a cool downtown adjacent neighborhood with a lot of historic property and historic value. So cool location, pedestrian to downtown. And then if you know anything about Athens, downtown, sits here, and then campus sits right adjacent to it. So we also like the position of this too, because downtown is great. There's great options downtown. Some of our direct comps are downtown, and it's certainly an option that folks can live in. However, you're choosing to be on top of the hustle and bustle. You're choosing to park in the deck and carry your groceries however far. You're choosing to deal with the nightlife, at your front door, that sort of thing. Whereas at the Mill District and adjacent to downtown, what we're calling the halo of downtown, it's the best of both worlds. You have full access, full pedestrian access to downtown and certainly the Boulevard Historic District and the Prince Avenue corridor, but also you're in a neighborhood, you're out in a community, you have surface parking, you have all this green space at the Mill District and your own little community where you can breathe and where you can feel like you're in a more of a community, not just in a mid-rise crammed downtown with all the hustle and bustle that comes with that. So wonderful option, best of both worlds, and couldn't be more excited about our halo of downtown location.
Yeah, and another thing to talk to, what you see all here, the June 12th, the commission approved. This is something that I use all the time. These multi-use bike and pedestrian paths, they're very popular. And what you'll see is it takes you right up from the Mill District, right to downtown, right to the university. It's a great ad for us. And it's something that I know will continue to be popular to be used by our tenants as well.
Yeah, great point, Brad. Now we're going to talk about the market and the certainly everybody's familiar with the university and the brand and all that, but let's talk about Athens itself for a second. Athens, Georgia, the classic city. If you've never had the pleasure, hopefully you'll come meet us there one day, and it truly is the classic city. Old historic roots, but firmly a bustling new age economy, basically a suburb of Metro Atlanta at this point. Only being an hour to the northeast of Atlanta, but an MSA in its own right, and a booming economy in its own right. Even Oconee County, which is kind of basically the Athens suburbs, is some of the best school districts in the state. Truly a wonderful place to live and a wonderful place to work. Outside of the university. Athens also is just anything you want to find. There's nightlife, there's bars, there's restaurants, there's arts and entertainment. There's also a music scene. If you're not familiar, acts like the B-52s and REM and Widespread Panic, Drive-By Truckers. These all came from the Athens music scene. So Athens has historically been a thriving music scene, and continues to be so to this day. Great place to live, to work, and to play. And then we move to the University of Georgia. If you're not familiar, I have some questions, but I'll go ahead and reinforce the G and the brand of the University of Georgia. It's a tier 1 SEC Power 5 major market, major brand university. It's on a short list of some of the most influential, powerful brands in the space and in the country. Everybody's hopefully you've heard about their recent athletic success. They've had athletic success in a lot of different ways for a lot of years as well. Great academic institutions, 40,000 enrollment is massive, and the university system could throttle that up, overnight if they wanted to. Just great demand fundamentals in this market that this university and the all the success and the accolades and the attractiveness of this brand and this university are pumping these, a never-ending supply of these students right to our front door.
That's right, Biff. It's evergreen, and actually a very interesting phenomenon called the Doug Flutie effect, which I thought was a joke, but after researching a bit more, essentially, when a football team like Georgia's has performed well for like a national championship, students end up, the enrollment increases, and that enrollment remains high for the next 8 to 10 years. And so you put yourself in the position of a 17, 18-year-old kid, and you want to be a part of the game day experience. You want to be a part of the in that stadium right there. And so, believe it or not, it actually does affect the 18-year-old's head on I want to go to school there. And data backs this up, that when universities perform well in football, their enrollment goes up. It's very interesting, and certainly Georgia with their last 3 years here have fit the bill.
Yeah, it's worth mentioning. Great point, Brad. It's also worth mentioning too. Talking about the demand fundamentals in this market, the state of Georgia, and there are some other states that have similar programs, but Georgia specifically has what's called the Hope Scholarship. Now that's a state-sponsored, state-funded, lottery-funded scholarship, merit-based scholarship that all Georgia high school students can achieve. It's designed to keep the top talent in the state. So high-performing high school students can get the award of this Hope Scholarship, and essentially the state and the lottery is subsidizing these high-achieving, typically affluent students, again, funneling them right to our front door with disposable income to pay for a product in a location just like ours. So to speak to that evergreen, renewable resource of this freshman class every year over year, ready to find a product like ours and pay for a product like ours, truly can't be understated.
No, that's great, Biff. It's really good. And I know Biff and our partner Charles both were able to take advantage of this Hope Scholarship. So we know it to be true. Is actually a part of our strategy is going into Georgia, because we know, put yourself in the position of these parents who have been saving for their kids' tuition their whole kids' lives. Their kid stays in state. They get this Hope Scholarship. They're going to University of Georgia, and they get an 80% or maybe 100% ride, all tuition paid for. Well, what do you do with all that funds? The funds go towards a beautiful, safe property such as our own, and it kind of indirectly subsidizes our properties in that way. So yes, that's right, Biff, and Biff's part of it, and also it's part of the strategy. It's these are the things that we see that will continue to help us perform in the years moving forward.
That leads us, so we talked about Athens, we talked about UGA and the market itself. Now let's look at the comps inside of the market. I mean, these are the direct comparables. These are what we directly benchmark our success, our property, market rate levels. I mean, these are the comps. These are the ones that matter. This is our submarket. And as you can see, and I'm getting ahead of myself here, but the business plan is about to be discussed, in detail here in a second. But the business plan is very simple, very simple. We have construction delivery level rents today. In-place rents are artificially low because this developer did not get to finish their business plan. The developer delivered this product. They achieved a developer level, base rent, and they were ready to push those rent rates up to market stabilized level over the next couple of years, but they had to sell. That's another one of these reasons why this opportunity is so valuable. This property would be beautiful, this property would be profitable, this property would appreciate even without that rent growth delta. But then you throw that rent growth delta on top of those other fundamentals, and it truly just kind of leaps off the page. So as you can see on this next slide, our in-place rents have every bit of 300, 400, even 500 and beyond dollars to get up to market stabilized levels. Comps like the Mathis, over $500, deltas. I mean, there's some even bigger numbers in here. Places like the William, which is downtown and actually just sold at a 5.1 cap. We can mention that here in a second. We're buying at an upper 5 cap, and we underwrote an exit at a 6.0. The William just sold in the last 6 months for a 5.1. So that also speaks to the conservative nature of our underwriting and also the strength of this market. In today's capital environment, in today's climate, in a market like Athens with assets like this in our submarket, these things are trading at a 5.1 cap. So again, business plan is simple. We have a current in-place rent. We are going to market stabilized rent levels. It's that simple. There's no CapEx here, brand new property. There's no value add. There's no reposition. There's no lease up. It's truly just assuming the developer's business, the portion of the business plan for the developer they weren't able to capitalize on. That becomes our value and our upside. That's the business plan.
Thanks, Biff. And just to hammer that home, that delta that he's talking about. So he mentioned the Mathis here is probably our closest comp. That delta, again, calculated out at a 6 cap, comes out to $18.1 million delta that we have value that we will be bringing to our property. And again, typically that would be saved for the developer, but because of his forced sale, that's all our upside. And as mentioned, we're not calling it a 5.1 cap. We're calling it a 6 cap. So going the other way conservatively, and that's what brings it to an $18.1 million delta, just to bring it to the Mathis's rents. One more thing, I want to go back one more slide, because one thing that is probably my favorite at a data standpoint is the absorption rate of Class A student housing at Athens. What you're going to see, and these are just our top 4, but across all Class A, you're going to see 100% occupancy, 100% occupancy. Our own is 100% occupancy. The absorption rate of Athens for Class A student housing is 100%. And that speaks to a lot of different supply-demand metrics, a lot of the growth of the university. I feel like that might be the most important data point that we can showcase, and that we are within that world, within the Class A world, more so. I mean, you're looking at 19, 20s that are getting it. We're in that 22 realm. So yeah, it's something just wanted to point out. As we roll over to, as Biff mentioned, the business plan's simplicity is its elegance. It is, there's nothing there that to trip up. We are taking a beautiful asset and bringing it to market level rents, and that's really it. It's again, we talked to on the top here, because of this for sale that we're being able to pick up, we do have a lot of upside, more so than normal. But we've got the commercial tenants are all in place, they're all leased up. And, in the end, if 5 years from here, we sell after stabilization. And that's as simple as a business plan can be.
It's also important to remember to tie into something you mentioned earlier, Brad. Not only is the business plan simple, it's the rent growth, no value add, no lease up, all those risks are mitigated. But also don't forget, these aren't Class A returns. This isn't a 12, 14% IRR. These are basically value add 18% plus IRR returns, but all the risk is mitigated. There is no renovation, there is no reposition, there is no lease up. This is a brand new, beautiful, delivered stabilized asset that we are just taking these rents up to market stabilization level. So the opportunity here is that you're capturing value add returns on a risk mitigated, brand new, beautiful, well located property.
Well, that transitions so well into this. So what we have here is our cash flow slide. There's a lot here. Not expecting, this is all part of the due diligence phase, right? Such an important part. Like your due diligence is the most important. So we want to answer any and all questions you have. The big things that, as Biff had brought up, the big changes that you're going to see over 2 years. So 2 years, we're hoping to get to where we showed you at the Mathis, at 29.4% NOI year-over-year delta. Well, we are already leasing up at our highest rent of $1,595. That's $434 above. And so what that shakes out to is 28%. So, and this is the first year. So the way you can see how we've kind of underwritten this is now that where our rents are and what we're capable of, we're talking risk mitigation at its finest. It used to be, well, we hope that we can get these rents. Now we know that we are getting these rents. And again, we're still within the first, 12-month span. This is year 2 here that I'm pointing out. It's an exciting property for that reason, mainly because of the risk mitigations that are already in place. Not to mention going back, on 108 beds, you start off with 1.184 on net operating income. That's strong in its own right. But yeah, you'll see the growth here. Again, would love to hop in on a call and talk through all this because it's just an important piece of the due diligence. Looking forward to talking to you. And then moving on to probably everyone's favorite slide is the return slide, return projections. And ultimately, you're looking at $100,000 yielding you $205,000 on a Class A asset. And again, risk mitigation, we'll say it over and over again, because that's what a Class A really means is risk. The risks are mitigated, and yet you're still more than doubling your money in 5 years. Things to point out for the distributions, as we spoke to the first year, we have inherited these rents from the developer. We are bringing these up, but the rent cycle is done every 12 months. So we are waiting for the next academic year to be able to put our rents into process, and then in which case you'll start seeing a dramatic growth from 5,000. Then you'll see year 3, 4, and 5 into the double-digit cash on cash returns. So again, with an average of an 8% cash on cash, very, very stout, very healthy.
Yeah, great points, Brad. It's very, very important that everyone understand that year 1 zero return projection is not a negative thing. It is the manifestation of the business plan that we're describing here. We inherited these low in-place rents, but remember, the whole business plan is to take those development level rents that we inherited and move them up to market stabilization, and that does take time. So, when you look at that is the manifestation of this business plan and this opportunity. That is not a negative. That is a positive. Yeah, and jumping right into just kind of what to expect post acquisition with us. We pride ourselves on being a top-notch acquisitions firm with the, as Brad mentioned, this laser-like focus on our niche and this strategy. However, we're operators too. You'll receive monthly reporting from us. We like to keep everybody informed. We like to showcase our progress. Robust quarterly reporting that'll accompany the quarterly distributions. We distribute cash flow quarterly to all our investors. So that's the expectation. Don't forget that'll start in year 2 in this business plan, and don't forget also that is our upside. And then just communication in general. You don't have to wait for the monthly report. You don't have to wait for the quarterly robust report. You can call us anytime. We can jump on a screen share. We can answer questions. We pride ourselves on being available and transparent because it matters. You know, we want people to invest with us because they feel comfortable, and that's not just because we ship you a check every quarter. That's because you know us, you see us, you can ask us questions, you feel involved. These things, these are the intangibles that are just as important as your check. And let us hear from you. I mean, pull out your phone and click on that QR code. It'll send you directly to a Calendly link to put some time on our calendar if you want to go through the underwriting, if you want to ask specific questions, if you just need us to tell you everything we just told you one more time. We're certainly happy to do any of the above. You know, it matters, as Brad mentions, your diligence is everything. You have to understand the pros of an investment like this. You ask us the cons. I mean, we're going to tell you that they're few and they're mitigated, but we would love the opportunity to talk to you directly and to you know, put your mind at ease on any aspects of this investment today, tomorrow, and in the future. So please reach out. Please let us know how we can help you. Please let us know how we can start your investment process.
Yeah, thanks, Biff, and thanks to the TGT Capital team. Excited to speak to all you guys here very shortly.
So I told you this deal was absolutely amazing. Now I want to hear from you. What do you think? What did you learn about multifamily syndications? And if you're already a savvy, experienced investor, just make sure you use the link below to get on my calendar so that you have a chance to be a part of this amazing deal. As I stated before, there are only 8 more slots available for accredited investors at $100,000 entry fee. If someone happens to bring the whole 800,000, then there's only 1 slot available. So if I were you, I would take action as soon as possible. Remember to click the like and subscribe button below so that I know that you had a great experience watching this awesome video. I'll see you next time. Can't wait to hear from you.